Hi everybody, this is Tim Knight, slopeofhope.com, with a little market commentary here on October 27, 2009. First up, as I've been saying over and over, it's all about the dollar. It's all about the dollar, and the reason that we've gotten a nice big break this week on the bear side is all because of this. You're looking at it, the euro's softness. The important thing here, from a technical standpoint, is this trend line that I'm hovering over. We have a steady ascent and have not violated that trend line, which, big surprise, started up back on March 5th, the big day when the bulls grabbed the well, I guess the bull by the horns, and have been in control ever since. But on the one hand, things might be starting to slip away from them, and on the other, there's no all clear signal yet. The bulls probably got quite excited and encouraged by this breakout to new highs that took place earlier this month, but we have here breakout failure, and this is important. Now, you could look at an index graph, and you're going to see much the same thing in terms of a breakout to new highs about a week ago. Here is the key. Let me bring up the DIA to talk about this. As is quite obvious, I don't have prepared notes in front of me. I'm just kind of ad-libbing this, but I do know what I want to get at. To me, it would seem it's all. There's kind of three ways we could go here, two of which are good for the bears. One way would be for us to have yet another surge to new yearly highs. That is, we just launch like a rocket off of this and soar up into highs. And I know the 1120 on the S&P crowd and even the 1200 on the S&P crowd would not be surprised to see this. So that's one possibility. The one other possibility, which is just an outright break of the trend lines you see. A clear, sharp break, a shattering of those supporting lines, indicating that we are in a whole new ballgame here, and the bears are in control, and just sell any rallies. And the third possibility, which I'm kind of leaning toward, and in a way would actually be best, would be a modest rise higher back into this sort of zone, maybe above 10,000 on the Dow, somewhere in the very low 10,000s, and then a cracking of that trend line. I think it would do us all a bit of good to get one last little lift. The second and third possibilities that I've outlined would be good for the bears, either one. It's just a matter of patience. And the first one, of course, would be painful. I am positioned very short right now. I have no long positions, but I've got about 40% of my buying power deployed. Now, let me zip through a few charts here just to hit on any topics that I might. The story's the same among a lot of these charts. Some are more fragile than others. The China one here, for example, the China index, I think this is a very fragile situation this one's in, which is why I bought FXP today. But they all have slightly different versions of an enormous rally up to a huge inverted dome of some kind. Some rallies have been more robust than others. The utilities, for example, this is still very substantially beneath its highs, but I think this horizontal line here is quite impenetrable, or at least very tough to penetrate. And so that's why one of my largest cash short positions right now is the XLU, because of that index. Gold has been stronger relative to indexes, and I'm kind of off my gold bear high horse for the moment. It's a wonderful trading vehicle, GLD and GDX. for swings, but I have no positions in precious metals. I basically got off that train yesterday, thank goodness. Here again is the Indu. And this green zone that I keep painting is essentially the belt of uncertainty, as it were. Rise above it, and the bulls are not only still in control, but I don't know if there'll be any bears left at that point. Stay within it, and the kind of uncertain and nervousness the whole market's feeling right now remains, and dip beneath it, crack that trend line, get south of that band, and the good times for the bears can simply flow. I'll make a side comment here. And I was talking to the evil speculator today, Mulcool, and we had a nice long chat on the phone. And what I told him, and I really mean this, is that the market feels different to me now. It feels so much better, and it isn't just a matter. It's not like we just fell 3,000 points, and boy, doesn't that feel good. I mean, this has been nothing dramatic. I mean, it's fallen a couple of days. We're just a couple of percent off the yearly highs. So this is not bear giddiness speaking. What is speaking is technical analysis, charting, setups, patterns. It's all working again for me. It's all feeling right again for me. And as you've seen, I mean, I'm buying. I'll step out there and buy $250,000 of DIG, ultra bullish on energy, very happily. It's not just shorting, and it's working. It's feeling right again, and that is a very redeeming feeling after most of this year. But as I look through these things, and I would be amazed and flabbergasted, and I'll say profoundly disappointed if we somehow rally to new yearly highs. But it's a possibility, and we all have to accept that. But I will say that looking at these charts, especially with the kind of bottoms-up approach I'm taking, that is looking at 1,000 individual charts rather than spending that much time with one chart of the SPX, my confidence in the frailty and the danger to the bulls in the equity market is very firm. I have had good success lately shorting the likes of CAR, SA. I'm remembering these now because I covered. I've got 164 positions still in one account, but I covered a handful of them today. The kinds of mega rallies we've seen are starting to fall to pieces. Look at this, dollar thrifty today alone, almost 16% drop. So these fantastic rallies, these multi-1,000% rallies, I mean, they're not just showing their age, and they're disintegrating. And so that's benefiting my positions. I hope there's a lot more of that to come. And we also, of course, this kind of thing. I mean, 50 points off BIDU. And actually, I love this kind of chart particularly because I actually had neither a position nor any much interest in BIDU yesterday. But after it broke this substantial a trend line and pushed its way to the underside, that's when I get excited because the stock has completely tipped its hand. And you could enter, I mean, what if it goes up to 400 again? That's even better. But I didn't want to wait and see. I'm in the position already. But it could well push up into the low 400s again, and I'll probably short some more. Because again, the stock has completely tipped its hand as to what it's doing. It does not move from here to 500. The stock's broken. And I want to take advantage of that fracture. So I am the 10-minute mark is looming here. I'm going to wrap this up. The balance of this week should be interesting. I know the end of October has meaning for investment banks and bonuses and all that good stuff. Back in 2007, October 31st marked the peak in the NASDAQ, if memory serves, and then the fun really kicked in November 1st, so who knows. Anyway, it's been a really good week so far. It's just a couple of days, though. We'll see how the rest balances out. Oh, excuse me for the head. And good night, and I will be back on Wednesday. Adios.